individuals and business names in Nigeria, you can now pay less tax. Let's show you how. My friend, yes, you can now pay less tax as a self-employed individual or business name in Nigeria. All you need to do is to understand the various tax incentives which have now been made available to self-employed individuals and business names by the new Tax Act 2025, and then the taxability of the system. And this is exactly what this compass of video is all about. In this video, we will give you a broad insight into the various tax incentives provided by the new Tax Act 2025. While the tax authorities identified about 51 tax incentives, Tax Corp have identified over 106 tax incentives in the new Tax Act, and we now show you all this in broad terms. In this video, you'll get to know the two broad categories of taxable persons in taxation and in Nigeria. They are incorporated taxable persons and unincorporated taxable persons. And incorporated taxable person is an artificially created person, which is created by the incorporation under the Companies and Allied Matters Act 2020 as amended by the Corporate Affairs Commission, CAC, as a legal person or entity, separate and distinct from its owners, and which is liable to taxation in Nigeria. They include private limited liability companies, public liability companies, and incorporation sole. An unincorporated taxable person, on the other hand, is a naturally created person or an artificially created entity, which is created by registration under the Companies and Allied Matters Act 2020, as amended by the Corporate Affairs Commission (CAC) as a legal entity, but which is not separate and distinct from its owners, and which is liable to taxation in Nigeria. They include employees, self-employed individuals, sole traders, businessmen, businesswomen, businessmen. We will deal with incorporated taxable persons in a dedicated video. However, the key difference in taxation between an incorporated taxable person is that because an incorporated taxable person is a legal entity separate and distinct from its owners, it has a life of its own and is therefore taxed in its name. An unincorporated taxable person, on the other hand, though a legal entity, is not separate and distinct from its owners, but treated as same as owner or owners. Consequently, it cannot be taxed in its name but that of its owners. Please note that this key distinction is very important. Please note it. Furthermore, unincorporated taxable persons are of two broad classes: employees and self-employed individuals. An unincorporated taxable person is either an employee or a self-employed individual, which can be a sole trader, a proprietor, an enterprise, a partnership, an independent contractor, or any business name. Again, we will deal with resident employees in a dedicated video. In this video, we will deal deeply with the taxation of a self-employed individual, which is defined as a self-employed individual is an artificially created entity, which is created by registration under the Companies and Allied Matters Act 2020, as amended by the Corporate Affairs Commission (CAC) as a legal entity, but which is not separate and distinct from its owners, and which earns income directly from their own trade, business, profession, or vocation, rather than working for an employer with a set salary. In this video, you are going to know and learn more on how to utilize the new tax laws and our expertise to pay less tax as a self-employed individual. All you need to do is just follow us attentively to the end of this video. In addition, we'll be releasing more videos. So to get the videos hot and fresh, kindly like, subscribe, hit the notification button, and share to as many people as possible. Please, before we go on, some important clarification on the objective of Tax Corp in reduction of tax. The objective of Tax Corp in assisting taxable persons to reduce tax is to assist you to reduce your tax legally and ethically, and not to assist you not to pay tax. Why? Because tax is necessary. Because it is a necessary thing to pay tax. Very important for you to pay tax. Why? Because tax is the resource our government uses to provide common amenities for our common good. At this point, let us intimate you with the fundamental and true meaning of tax from the origin of tax. Tax is an obligatory contribution agreed by members of a society, payable by eligible members of the society for the purpose of pooling resources together to be utilized by the body of representatives chosen by the society to provide common amenities for the common good of the society. This is the fundamental meaning and objective of tax. So you can see why you have to pay tax, but not disproportionately and excessively, but reasonably. Tax is an obligatory contribution which we all agree to make for our common good. A good tax is a tax that is equitable, progressive, compassionate, friendly, and simple. And this new Nigerian Tax Act score very highly on these important parameters and should be supported by all. What you will learn in this compass, you will learn the golden rule of tax freedom, tax incentives of self-employed individuals and business names, the two categories of taxable persons in Nigeria, the key distinctions between incorporated and unincorporated taxable persons, the fundamental meaning of self-employed individual, chargeable profits, gains, or incomes of self-employed individuals, the golden rule of taxation of self-employed individuals, determination of the residence of self-employed individuals, template for computing the income tax of a self-employed individual, composition of assessable income of a self-employed individual, explanation of the composition of the assessable income of a self-employed individual, composition of total deductions of a self-employed individual, classes, categories, and rates of capital allowance, composition of eligible deductions of a self-employed individual, approved income tax rates for self-employed individuals, tax deducted as source withholding tax, sample computation of the income tax of a self-employed individual, correction of an important but material error in the definition of taxable income in the Tax Act. Some tips on how to reduce the income tax of self-employed individuals legally and ethically. Some tips on how to better describe your expenses. List of the 22 interdependent compasses about tax code and the authors. Now, let's tell you the golden rule of tax freedom. Whatever that, this is exactly what you do to be tax free. Dear friend, do you really want to be free from tax wahala? No disturbance of your sleep by a taxman, no knocking at your door by a tax lady, no receipt of long queries by your business from a tax controller, no receipt of unsolicited reminders or threats by your company, no blocking of your bank accounts by the tax chairman, no debiting of your bank account at the directive of a tax authority, no barging into you or your business by law enforcement officers, no forceful entry into your business premises by tax officers and law enforcement officers, no threat of imprisonment by law court, no selling of your business and or its assets without a court order after the tax has become final and conclusive by the Nigerian Revenue Service. Dear friend, if your answer to the above compound question is a capital yes, then obey the golden rule of tax freedom. And you ask, what is this golden rule of tax freedom? And we tell you that it is called the three C's. And what are the three C's? Comply, comply, and comply. Tax incentives for self-employed individuals and business name as provided in the new Nigerian Tax Act. The new Nigerian Tax Act provided a lot of tax incentives for incorporated and unincorporated taxable persons, which include self-employed individuals and business names. Whilst the tax authority had identified about 51 tax incentives in new Tax Act, Tax Corp identified over 106 tax incentives and counting. For the full list and explanation of this 106 tax incentive, please watch Tax Corp video on tax incentive on Tax Corp channel on YouTube. Here we will just give you a broad insight. Tax incentives in the Nigerian Tax Act include exemption of small companies and small business for paying income tax or VAT and development levy, various tax incentives on exempted incomes or profits, various tax incentives on exempted chargeable gains, various tax incentives on deductions allowed, various tax incentives on loss relief, various tax incentives on capital allowance, tax incentives on final tax incomes, tax incentive on eligible deductions, individuals only, tax incentive on exempted vatable supplies, Tax incentive on portable supply charged at 0%. Input VAT, output VAT set-off relief. VAT refund or VAT credit relief. Withholding tax refund or tax credit relief. Various tax incentives on exempted stamp duty instruments. Relief for double taxation tax incentives. An example is that small companies with annual gross turnover of 50 million naira or below, with total fixed assets of 250 million or below, pay no income tax and pay no development levy. This is very nice. However, to qualify, you have to incorporate your business. Similarly, small businesses with annual gross turnover of 100 million naira or below, with total fixed assets of less than 250 million are exempt from charging, collecting, paying, and remitting VAT. The two categories of taxable persons in taxation in Nigeria are incorporated taxable persons and unincorporated taxable persons. An incorporated taxable person is an artificially created person which is created by incorporation under the Company Alamatas Act 2020 as amended by the Corporate Affairs Commission as a legal person or entity separate and distinct from its owners and which is liable to taxation in Nigeria. Examples of incorporated taxable persons are private limited liability companies by shares, private limited liability companies by guarantee, public limited companies, corporation sole. An unincorporated taxable person is a naturally created person or an artificially created entity, which is created by registration under the Company Alamatas Act 2020 as amended by the Corporate Affairs Commission CAC as a legal entity, but which is not separate and distinct from its owners and which is liable to taxation in Nigeria. Examples of unincorporated taxable persons are employees, which who are natural persons, self-employed individuals, who are also natural persons, sole traders, businessmen, businesswomen, farmers, who are also natural persons, sole proprietors, entrepreneurs, freelancers, who are also natural persons, independent contractors, suppliers, and service providers, who are also natural persons, business names, which are artificial persons, partnership and joint ventures, artificial persons, enterprises and small business owners, which are also artificial persons, non-governmental organizations, NGOs, artificial persons, estate, trusts, settlements, and communities, which are artificial persons. Now, the key distinctions between incorporated taxable persons and the unincorporated taxable persons. Here you have the table, which shows you the subject, what how it relates to incorporated taxable person and how it relates to unincorporated taxable person. So we quickly look at them. Ordinary nature. An incorporated taxable person is always an artificial person, always legally created. While on the other hand, an unincorporated taxable person may be an artificial person, legally created, or a natural person, naturally created. Legal nature. An incorporated taxable person is a legal person or entity. An unincorporated taxable person is a legal entity, but not a legal person. It cannot act alone. Relationship with owners. Incorporated taxable person is separate and distinct from its owners. On the other hand, um, unincorporated taxable person is not separate and distinct from its owners. In fact, it is regarded as the same as the owners. Limitation of liability. For ITP, shareholders' liability is limited to the unpaid amount on shares, while for UTP, owners' liability is unlimited and includes personal property. Litigation. For ITP, it can only be sued on its name, while for UTP, owners will be sued or the entity can be added. Taxability. ITP, tax is a legal entity regarding, while for UTP, owners are taxed on their incomes. Let me repeat. For taxation, the legal entity is taxed, while for unincorporated, the owners are taxed. The fundamental meaning of a self-employed individual and business name. There are two classes of unincorporated taxable persons in taxation, and they are employees, not self-employed individuals, please, and then self-employed individuals. An employee is a naturally created person who works for a person called an employer for an agreed salary payable periodically. An employee earns income from the work they perform for an employer and get taxed on the income using the tax system called payee, pay as you earn system. On the other hand, a self-employed individual is an artificially created entity which is created by registration under the Company and Other Matters Act 2020 as amended by the Corporate Affairs Commission as a legal entity, but which is not separate and distinct from its owners, and which earns income directly from their own trade, business, profession, or vocation, rather than working for an employer with a set salary. A self-employed individual employs themselves rather than being employed by somebody else. They work for themselves and control how, when, and where the work is done. They operate with high independence, setting their own hours of operation, finding their own clients, providing their own working equipment and other infrastructure, and bearing all business risk and earning all returns. Fundamental meaning of a business name. Essentially, a business name is the name by which a business is known or the name by which a person trades or does business. It is distinguished from the company name because more often than not, it refers to unincorporated businesses such as sole trader, sole proprietorship, partnership, enterprises, etc., as distinct from limited liability companies. A self-employed individual can be a business name if they register themselves with the Corporate Affairs Commission of Nigeria as a business name, such as Sanwo-Olu Business Ventures, Peter and Bar and Sons, Ganduje Trading Company, Akpabio Calabar Kitchen, Lawrence Onoja Farms, etc. Consequently, any reference to self-employed individual here also refers as a reference to business name. In addition, since a business name is simply a business vehicle, any reference to self-employed individual here also refers or serves as a reference to business name. Therefore, there is no need to mention business name alongside a self-employed individual in this video. Three layers of unincorporated taxable persons and taxation. Please note that taxable persons under unincorporated taxable persons category of taxation fall into three layers and will be taxed accordingly as shown below. Where the unincorporated taxable person earns only salary, they will be taxed as an employee using the payee system. Where the unincorporated taxable person is a proprietor and also an employee in another organization, first, they'll be taxed as an employee monthly during the year. Then at the end of the year, all their global income from all sources will be aggregated and taxed. Where the unincorporated taxable person earns salary and profit or earns only profit from the same business, first, they will be taxed as an employee monthly during the year. Then at the end of the year, all their global income from all sources will be aggregated and taxed. Chargeable profits, gains, or incomes of individual and business names. So what profits, gains, or incomes of individual or business name do you charge to tax? The Tax Act states that the profits, gains, or incomes of an individual chargeable to tax include profit or gains from any trade, business, profession, or vocation, royalties, fees, rents, or interest arising from rights granted for use, dividends, premium, charges, or annuities, fees, dues, allowances, or any remuneration for services rendered, discounts or rebates, disposal of money or money instruments, income, profits, or gains from disposal or lending of securities, prizes, winnings, honorarium, grants, awards, laurels, etc. Profit or gains from the disposal of property or fixed assets. Profit or gains from transactions in digital or virtual assets. Any other income, profit or gain not falling within the preceding categories, salaries, wages, fees, allowances, compensations, bonuses, premiums, profit, or other perquisites allowed given or granted by any person to an employee, any pension, annuity, or any other similar income. Income of a family recognized under any law or custom in Nigeria as family income, which cannot be separately determined. Income arising to a trustee of any settlement or trust or estate, or to an executor of an estate of a deceased person. Profits, gains, or incomes of individuals on which tax is imposed. Section 3 of NTA imposes income with respect to an individual on the following three sources of profits, gains, or incomes. Section 3, I repeat, please. Section 3 of NTA imposes income tax with respect to an individual on the following three sources of profits, gains, or incomes. And these sources are profit or gains of any enterprise, income of an individual or family, and income arising, accruing, or due to a trustee of an asset, of an estate. The golden rule of taxation of a self-employed individual and businessman. The golden rule of taxation of a self-employed individual is that the income, gains, or profits of an individual is taxable in Nigeria if the individual is deemed resident in Nigeria in a year of assessment. And where this is the case, the income, gain, or profits are deemed to accrue in Nigeria and chargeable to tax in Nigeria wherever they may arise, and whether or not the income, profit, or gains have been brought into or received in Nigeria. This is the principle of global income in the taxation of the income of an individual. This golden rule of taxation of a self-employed individual clarifies what is to be taxed on self-employed individual, which is income, gains, or profits of an individual, and that a self-employed individual can only be taxed in Nigeria if they are deemed to be resident in Nigeria in a year of assessment. And where the self-employed individual is deemed resident in Nigeria, their income, gains, or profits are deemed to accrue in Nigeria and chargeable to tax in Nigeria wherever they may arise, and whether or not the income, profits, or gains have been brought into or received in Nigeria. Determination of the residence of a self-employed individual in Nigeria. Paragraph 6 of the 12th schedule to NTA 2025 state that an individual other than a corporation soul or body of individual who has a source of earned income in Nigeria for a year of assessment other than an employment or pension shall be deemed to be resident for that year in the territory in which he had a place of or preferred place of residence on 1st January in that year. And where the source of the income is first acquired by the individual during the year of assessment, and he had no place or place of residence on the first day of that year, he shall be deemed to be resident for that year in the territory where he first establishes a place of residence during the year. And lastly, in any other case where the individual had no place or principal place of residence, he shall be deemed to be resident for that year in any territory from which his income, his earned income, arises in that year. Template for computing the income tax of a self-employed individual. Here is a template for which you can use to compute your income of a self-employed individual, sole traders, sole proprietors, entrepreneurs, and so on. So in this table, you have the subject and you have the sections for you to make clarification if you desire, and an amount we just inserted to help you understand it more. So the first item on this table is total accessible income. And what is total accessible income annual? It comprises profit from trade, business, or profession, employment income, that has salaries, commission, bonuses, benefit in kind, investment income, dividend from Nigerian companies, which you have to gross up, investment income, rent, interest, etc. You have to gross up, including withholding tax, chargeable gains, net of cost, and incidental disposal income. So when you add all these sources of income, you have total accessible income. And when you less total deductions, which comprises loss, capital allowance, income exempt, and final tax income, you have total income. And when you less eligible deductions, which comprises your contributions to National Housing Fund, and the other three, rent allowance, then you have chargeable or taxable income. Then it is on this chargeable or taxable income that you will now apply the graduated rates for individuals, which stops at 25%. Then you have computed tax liability. And it's from this computed liability that you can now deduct withholding taxes they've taken from you as per Section 51. And at the end of the day, what you now have is your income tax payable. Composition of total assessable income of a self-employed individual. So, Section 28 of Nigerian Tax Act specifically stated that the following five sources of assessable income, comprising earned income and income from investing as the sources of assessable income of an individual. They are assessable profits from trade, business, profession, or vocation, employment income, income from investing activities, profits or income from any other source, and chargeable gains from disposal of chargeable assets. Explanation of composition of the assessable income of a self-employed individual. Assessable profits from trade, business, profession, or vocation. Assessable profit or loss from trade, business, or profession is the profit or loss computed in accordance with accounting standards and adjusted for tax purposes. It is simply gross turnover less direct cost of sales or services, indirect cost of sales or services, and overhead or administrative expenses. However, the cost and expense to be deducted from the gross turnover must pass the golden rule of deductibility of expense. It must pass the golden rule of deductibility of expense, which is that the cost or expenses must be incurred wholly and exclusively for the production of the income for which the cost or expense is to be deducted. This is in accordance with sections 20 and 21 of NTA 2025. Please, for more information and clarity on deductibility of expenses, kindly watch our video on how to reduce tax through innovative application of the golden rule on deductibility of expenses. Employment income. Employment income includes salary and wages, fees and allowances, compensations and bonuses, premiums and benefits, other people's eyes allowed, benefits in kind, any pension, annuity, or other similar income. Income from investing activities include dividends from Nigerian companies, dividends from outside Nigeria, rental or higher income and royalty, interest, commission, and brokerages. Profit or income from any other source. Profit or income not included in the profits from trade, business, or profession. Income not included in employment income or income from investing activities. Chargeable gains from the disposal of chargeable assets. You have to know the golden law of taxation of chargeable gains. The golden law of taxation of chargeable gains is that gains accruing to any person in a year of assessment are chargeable to tax, and all forms of property, whether situated in Nigeria or not, are chargeable assets for the purpose of chargeable gains in Nigeria. Please get the full enlightenment on golden rule of taxation of chargeable gains and others on our YouTube channel. That's all. Composition of total deductions of a self-employed individual as stated in section 28 of NTA. Section 28 of NTA states that total deductions as the sum of the following four deductions that should be made from assessable income to arrive at total income. It is the sum of these four. And what are the four? Any loss ascertained in accordance with assessable profit computation. Capital allowance in accordance with the provisions of Part 1 of the first schedule. Income of the individual that is exempt from tax under this act, and the income of the individual on which tax has been deducted as source under Section 51 of the Nigerian Tax Administration Act. Any loss ascertained in accordance with assessable profit computation. You have to know and understand the golden rule of loss relief. The golden rule of loss relief is that loss in taxation is firstly the excess of cost and expenses over gross turnover or income, wholly and exclusively incurred in the production of the gross turnover or income in a basis period, and which the Tax Act allows to be relieved from the amount of assessable profit or income of the first year of assessment, after that in which the loss was incurred, and in subsequent years of assessment until the loss is fully recouped. The loss to be deducted in arriving at the total income of individual is the amount of loss incurred by the individual during the year or the preceding year of assessment in a trade, business, profession, or vocation, and the amount of loss incurred on the disposal of a chargeable asset. However, in no circumstances shall the aggregate loss deduction from income exceed the amount of that loss. The loss shall be deducted as far as possible from assessable profit of a trade, business, or profession of the first year of assessment, after that in which the loss was incurred, and in subsequent years until the loss is fully recouped. The loss incurred during any year of assessment shall be computed in accordance with the basis period general rule. Any loss incurred in any period from sale, disposal, or any other transaction in digital or virtual assets shall only be deductible against the profit or gain from the digital or virtual assets. Please watch how you can reduce tax through innovative application of the golden rule of loss relief on YouTube channel Taxable. Capital allowance in accordance with the provisions of the first schedule to the Act. You have to know and understand the golden rule of granting capital allowance as well. The golden rule of granting capital allowance is that capital allowance is an allowance which the tax law grants a person for the acquisition and use of an asset or qualifying capital expenditure in a basis period for the production of income in a trade, business, profession, or vocation, which is granted at prescribed annual rates of the cost of the asset over tax estimated life of the asset or the qualifying capital expenditure and deducted from the remainder of the assessable profit or income in determining total profit or income for a year of assessment until the capital allowance is fully recouped or absorbed. Please watch how you can reduce tax through innovative application of the golden rule of granting capital allowance on our YouTube channel, Taxable. Income of the individual that is exempt from tax under the Act. Incomes of individuals that are exempt from tax include income of a person from an employment where such person earns gross income of national minimum wage or less. Those who earn minimum wage or less are exempt from tax. Income earned from bonds issued by a state or the federal government of Nigeria. Pension, gratuity, or any retirement benefit granted in accordance with the Pension Reform Act, exempt. A sum received by way of death gratuities or as consolidated compensation for death or injuries. Redundancy, lump sum payment, and other compensation of capital nature for loss of employment. Employments of any person serving as other rank and other personnel serving in combat zones, hazardous, dangerous places, exempt. Dividend received from investment in wholly export-oriented businesses. Dividend, interest, rent, or royalty derived from outside Nigeria and brought into Nigeria through approved channels. Wages and salaries of military officers, those who fight for us. Gains accruing to an individual that are exempt from tax include gains from disposal of investment held as part of any National Provident Fund or other retirement benefit schemes. Gains on disposal of a decoration awarded for valor, gallant conduct, which a person acquires otherwise than for consideration in money or money's worth. Gains for compensation for loss of employment of 50 million and below. Final tax incomes. Income of an individual on which the tax deducted as source under Section 51 of the Nigerian Tax Administration Act is the final tax include dividend received from Nigerian company called frank investment income, interest on short-term securities, interest on corporate bonds. You have to know and understand the golden rule of taxability of withholding tax. The golden rule of taxability of withholding tax is that only transactions which have the expressed nature, constructed or construed in the nature of a contract or supply are eligible to withholding tax, except where the Tax Act provides otherwise. Consequently, transactions undertaken in the normal or ordinary course of business are not eligible for withholding tax. Please watch how you can reduce tax through innovative application of the golden rule of taxability of withholding tax on our YouTube channel, tax code. Classes, categories, and rates of capital allowance. There are three classes of qualifying capital expenditure, and these are class 1, class 2, class 3. Under class 1, you have building expenditure, agricultural expenditure, mass expenditure, intangible asset expenditure, heavy transportation expenditure. All these expenditures have just one capital allowance, and the rate is 10%. Class 2 is for those who have 20%, and they include plant expenditure, agricultural equipment expenditure, furniture and fittings expenditure, mining expenditure, other equipment expenditure. The annual rate of capital allowance is 20%. And you have class 3, where the annual rate of capital is 25%. And the qualifying expenditures are motor vehicle expenditure, software expenditure, other capital expenditure, 20% annually. Composition of eligible deductions of a self-employed individual as stated in the Act are individual's contribution under the National Housing Fund, the individual's contribution under the National Health Insurance Scheme, the individual's contributions under the Pension Reform Act, interest on loans for developing an owner-occupied residential house, annual amount of any annuity or premium paid by the individual during the year preceding the year of assessment in respect of insurance on his life or that of their spouse, and rent relief of 20% of annual rent paid, subject to a maximum of 500,000 naira, whichever is lower. Approved income tax rate as per section 58 and the fourth schedule of NTA. Here you have them. There are six brackets. The first is first 800,000 at 0%, meaning that whatever income you earn, your first taxable income of 800,000 is tax free. Next is the 2.2 million at 15%, and next is 9 million at 18%, and next is 13%, 13 million at 21%, and the next one is 25 million at 23%, and the last, anything above 50 million, you'll be taxed at 25%. Tax deducted as source, also called withholding tax. Tax deducted as source is treated either as a final tax or advanced tax. If the tax is treated as a final tax, then the income payment or item is not subjected to further tax, and the final tax is regarded as final tax. However, if the tax is treated as an advanced tax, then the income payment or item will be grossed up and subject to further tax. And when the further tax is calculated, the advanced tax is deducted from them. Incomes, payments, or items which tax has been deducted as source and are treated as advanced tax and will be deducted from further tax include the amount you pay as withholding tax on contract and supplies, professional fees like lawyers, like accountants, like surveyors, interest commissions and brokerages, rent and royalties, payee tax, and others. Sample computation of the income tax of a self-employed individual. Here, we are giving you a table that shows how you can calculate your tax. Once you have arrived at chargeable income or taxable income, you plug that figure into this table and you get the computed tax from which you now less your tax as source. So we have um, we have 5 columns. The first column shows you standard taxable income bracket, like we just mentioned, first 800, next 2.2. The next column shows you the income tax rate from 0 to 25. And the third column shows you the employee taxable income bracket, depending on what it is. Then the fourth column shows you the taxable income balance. Here we are using that the taxable income of the person is 60 million naira. Then the fifth column is the tax you now compute. So if the person's taxable income or chargeable income is 60 million, for instance. So what you do is that the first 800,000 is out. So when you remove the first 800,000, you have 59.2 million. And that first 800,000 is taxed at 0%. And you have 59 million balance. So if you remove the next bracket, which is 2.2 million, you will now have 57 million. And when you multiply this 2.2 by 50, the tax rate, which is 15%, you have 330,000. So your balance is 57 million. So the next bracket is 9 million, meaning that 9 million can still go out of 57 million. So by the time you remove 9 million from 57 million, you have 48 million. And when you now tax that 9 million by 18%, you have 1.6 million. This is how you calculate it till you get to the total chargeable income of 60 million. Then your tax becomes 12.9 million. And assuming, for instance, you had a tax deducted at source of 3 million, when you deduct it, the person will now remain the balance of 9.8 million. Correction of an important but not material error in the definition of taxable income of a self-employed individual. The tab below is the template or format for calculating the chargeable income or taxable income of an individual, whether self-employed or not. However, the Act wrongly stated two things in Section 28 and Section 28, as we show you. 21, yes. So, the first one is assessable profit or income is in Section 28 2A. Less total deduction, you have total income. Less eligible deduction, you have chargeable income. Let me repeat it. The way you calculate your chargeable income as per the Act is this. The first item is assessable profit or income. Then from the assessable profit income, you now less total income, and you have total income. You now less total deduction, and you now have total income. From total income, you less eligible deductions, and you have chargeable income. The sections of the Act are stated here for your clarification. In Section 28(1), the Act wrongly stated that the total income of an individual for any year of assessment is their taxable income less total deduction. I repeat, in Section 28(1) of the Act, the Act wrongly stated that the total income of an individual for any year of assessment is their taxable income less total deduction. It went further to wrongly confuse the definition in Section 28(1)(a) by stating that taxable income is the aggregate amount of assessable profit from trade, business, employment, income, and other different sources of income. However, the foreschedule to NTA helped in correcting the error by stating that after the relief allowance and exemptions had been granted, in accordance with Section 30 of NTA, the taxable income ascertained shall be taxed at the following rates. The relief allowance mentioned in Section 30 of NTA are eligible deductions stated in paragraph A of Section 30, meaning that you arrive at taxable income after deducting eligible deductions from total income and not the other way round, where the Act stated in Section 28 that you arrive at total income after deducting total deduction from taxable income. No, in taxation, taxable income is the bottom line. It is the same as chargeable income and total profit in taxation of incorporated taxable person because there are no eligible deductions in taxation of incorporated taxable persons. Lastly, let me clear this again. In taxation, taxable income is the bottom line. It is the same as chargeable income and is the same as the total profit in taxation of incorporated taxable persons because there are no eligible deductions in the taxation of incorporated taxable persons. Lastly, what the Act wrongly called taxable income in Section 20 is actually called accessible income and not taxable income in taxation. Some tips on how to reduce income tax of a self-employed individual. Please know your tax law well. Be proactive. Plan your tax matters ahead. Plan all your plan all year round, not just when you want to deal with tax. Understand deductions allowed and plan to increase them legally. Understand deductions not allowed and plan to decrease them legally. Be creative and innovative, but please don't be fraudulent. Corporatize your business. Monetize your personal efforts in the business. Don't mix business expenses with other expenses. Same with banking. Describe your business expenses sufficiently and clearly as indicated below. Document all business transactions. You will require them later. Keep comprehensive, proper, and accurate records of your transactions. Deduct all taxes and pay all taxes and duties on assets and expenses. Recoup all taxes, be they withholding tax, VAT, and others. Claim all expenses timely and sufficiently. Take calculated risk, and when losses arise, claim them from profit fully. Spend more money on capital assets and claim capital allowance fully. Select and right-size your portfolio very well. Then invest heavily on tax-exempt investments. Look out and choose investments with withholding tax as final tax. They are tax low. Withholding tax as final tax. Withholding tax is some are 5%, some are 10%, some are even 2%. But uh, company tax rate is 30%, while individual tax rate is from 0 to 25%, which are higher than final tax. That's why final tax is a tax incentive. Harness the tax incentives to reduce your tax. Go to our YouTube channel, TaxCorp, and harness the 106 tax incentives which we have identified. Significantly increase your contributions to the National Housing Fund. They reduce your tax liability and increase your capital assets. Significantly increase your contribution to the National Health Insurance Scheme. They reduce your tax liability and enhance your health. Significantly increase your contributions to pension fund. They reduce your tax liability and guarantee a better life when you retire. Borrow money to build your residential house for it reduces your tax liability as there is no interest limit. Most importantly, consult and stay with TaxCorp for all your tax matters. Some tips on how to better describe your expenses for allowability. Be business focused, be creative, favor allow deductions, be exact and apt. Standardize your descriptions. Describe sufficiently. Don't trade details for brief. Avoid ambiguity. Avoid vagueness. Be very clear. Avoid personal, private, or domestic description. And here are the list of the 22 interdependent compasses. Please go through them, and if you desire to know more about any particular subject, just go to our YouTube channel and you'll get that. And should you desire any clarification on any subject that is not here, please drop your comments on the comment section on get to us through any of our contact channels. And here is about TaxCorp. TaxCorp is a Nigerian tax consulting firm which specializes in tax matters. Prince Chid, FCA, FCTA, MBA, is the principal consultant. Prince Chid is a licensed fellow of the Institute of Chartered Accountants of Nigeria, ICANN, and the Chartered Institute of Taxation of Nigeria, and the Chartered Institute of Taxation of Nigeria, CITN. TaxCorp and Prince Chid have provided tax services to numerous individuals and corporate bodies in both the public and private sectors, locally and internationally, since 1990, that is over 3 decades. The beneficiaries include the Nigerian Revenue Service, which was formerly Federal Revenue Service, Revenue Mobilization, Allocation, and Fiscal Commission, RAFAC, State Internal Revenue Services, numerous of them, Lagos, Abia, and so on, Federal Capital Territory Internal Revenue Service, and many private companies and individuals. So, dear friend, you've seen it, how you can reduce your tax, and if there's as a self-employed individual or business name, Should you desire any more clarification, please contact us through any of our contact channels and we'll do justice to your issues. Thank you.